Hello, 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 everyone. Happy Thursday, Unemployment Thursday. How is everyone doing today? Good morning, Jacob. Good morning, Patrick. Good morning, John. Are the comments not working? Huh. Could, besides that, it looks like they cut off. So if somebody else could type something in, well, we're getting started. There we go. Good morning, Options 22. Again, hope all is well with everybody. It looks like Sterling, with no news, might be tied up at work. Yeah, he still has that old day job. So, what do we have going on today? Looks like the markets are getting back into a risk on mode, to coin the CNBC phrase. We have the initial continuing jobless claims just climbing slightly higher, but nothing really major. Nothing really major. Remember, non-farm payroll is tomorrow. We got second day of Powell testimony, but it's a pretty quiet day. You have Mester speaking, and you have consumer credit change, but there's not much ahead of non-farm payrolls. Tomorrow's morning is going to be the big number, so keep that in mind. The February number at the beginning of March. Good day, Christoph. Good morning, Mark. Crazy risk on again. We're getting, even with Powell's testimony yesterday and his prepared remarks, it's like we're not in a rush to cut as long as stuff stays strong. And it's going to be further towards the end of the year. And with that, the yield comes down on the 10-year. The notes are rallying. So we shall see the markets bouncing back. Again, there's just not a lot of fear in this market. It's just in rah-rah what keeps going higher. So trade with the trend. Right now, you have your mega caps, except for Tesla, which we're dropping out of the magnificent whatever, the amazing group of stuff, but still Apple. Again, Apple can bounce and everything, but Apple, I've really, it still should get some more lower prices. Nvidia still chugging along. Broadcom, we got Broadcom earnings after close, but all the chips strong. Costco earnings after the close, so it's still raw markets. Technology, let's just do a quick refresh here because stuff's all right. We have everything positive on day. Lagger is energy, leader is technology and comm services. So all you really need to know. FedWatch tool is through next March, is pricing in 5 cuts. So even with the I call it slightly hawkish testimony with Powell, it's still markets, well, we're still going to have more cuts than you expect, or Powell expects. Fear and greed, right at greed versus extreme greed. This will probably be bouncing into extreme greed back on the open. Good morning, Royal Palms. Good and bad news all supports markets. Watching Nvidia this morning as the driver. Yes, Nvidia is still the massive driver. Good morning, Heinrich. Hey, Christoph. Apple's most oversold it's been since 2018, and I expect bounces in Apple, but then rollover plays unless something really changes. And it's got some heavy lifting to do. There wasn't much after the close yesterday. Kroger, big lots before the open, but nothing really market moving. Broadcom and Costco after the close, as I already mentioned, and then not much tomorrow. Again, remember, earnings season is really on the tail end. So that's where we sit right now. So yesterday was interesting. You got the little 1 hour close up to then bouncing to 75 with no follow through with the 4 hour. No follow through with the 4 hour. Then we got the bigger pullback. And then you actually got a 4 hour % B buy coming back up. This is not a big enough pullback though to, why does this keep resetting? I don't know. There we go. This is not big enough pullback through to potentially reset this little mini double top. Never says it has to trigger, but for more of, it could be a good area to watch for a stop, especially on a closing basis below 50.63, because the rotation zone would be out of the way. So if something changes in the market, the rotation zone, at least on the daily, would be out of the way, and that could have a pullback to, back to February low area. Other than that, There's nothing in the cards today that looks like it's going to stop this. So the next target higher is 51.46, which also is a harmonic, the 87.5, but also lines up exactly with the closing price for March 1st. Then you got 51.57, 51.58. And then from a reverse harmonic standpoint, you have 51.69.50 and 51.81.50. From a forward harmonic standpoint, you have a cluster at 51.81.50 to 51.82.50, and then 52.07. So those are all your key levels should it continue marching higher. On a pullback basis, the minor support's coming in about 51.22. Significant support is coming in, a very significant support is about 51.15 on any pullback. Below that, 50.100, 50.98, you see right here, testing low, just closing below it. Key reversal right there, so 50.98 to 51.00. On the NASDAQ, has not got rejected by the 62.5 yesterday, so that is the key level. Still 18,173 on a closing basis. Above that, 18,241 to 18,252, and then 18,309. The pullback levels for this morning. The minor pullback level is roughly about 1892 to 18,100. You have a very strong support area between that 18,100 to 18,080 area. Below there, you don't have much until back to 17,968 should we get a market rollover. But that's where we really stand on the daily chart. You see this has some more heavy lifting to do to get to at least above 18,241.50 to get into double top territory. So that's what I'll be keeping an eye on there. But unless something really changes, going into the open, this 18,173 area is very, very key. The Dow, not much to talk about. The Dow's still up slightly, but the major area is 38,900 to 38,911. If it gets through there, then 39 to 39,019. The very strong support level is about 38.7, and then you're at about 38.550. The Russell, still holding the rotation zone. This is getting extended on the right-hand side for the potential double, but not invalidated yet. And is there another mini double? 2084.7. It has to get past, and the high is 2085.1. So yes. Now, you'll see the same thing in another market I'll show you in crude. When you have these channeling doubles, they're lower probability. Why? Because if it triggers farther out to the right with a key channel line, and you actually have the 50 EMA rising up, that continues to rise and eats away at the targets. But those are still a target that I'd be looking for pullbacks. The real thing that has to turn the Russell lower, you can't get I can't get overly bearish until it gets back below 2,000. You can get short-term bearish, but not longer-term bearish. Sorry, I'm having trouble speaking this morning. So glad your life-saving portfolio isn't 100% Tesla anymore. I don't think you should have any portfolio in 100% in any stock, period. Good morning, Anissa. Hey, good morning, Sterling. Running late? It's okay, Sterling. Thank you for tuning in. Good morning, Richard. So let's see what else do we have. The VIX, again, pretty strong reversal now, dropping back below. So in the short term, we're really looking at around about 15 to get into spiking bearish mode. I mean, this is still elevated recently, but it's reversing pretty quickly. So unless we really start bouncing back above right around 1450 in the short term, it would just be any pullback. I'd be looking for reversal patterns, at least in the short term. Right now, we have the DAX keeps on marching back up. Let's just take a look at something. No. So, I mean, we'd have a breakdown level roughly around here. Let me take off some of these old levels. We'd have a breakdown level. The key breakdown area is roughly about 17.6. Other than that, your minor target's still 17.903. Actually, let me drag these back to the key harmonic. 17.972 is the first target area for a continuing move higher if it takes out the high from March 1st. The notes, very close to invalidating it, but not yet. If we close above 111.27, only hit the first target and then reversed. Let's see how that goes with Powell's second day of testimony. The micro yield, technically this stop is still down at 3.947. Watching to see if we could get any bounce. We are getting cycles bottoms deeply oversold with percent B buy setups, but nothing yet. And then the interesting thing is we're bouncing into key resistance. So still the trend is down with potential shorter term bottoming patterns, but nothing yet on the table. The 10-2s still potential little mini double bottom territory, but nowhere near triggering yet. Dollar index holding the last line of key support, closing back below that 103.20 yesterday. So can't get bullish unless it can really bounce above that 103.80. Everything on any bullish moves I'll be watching for rollover patterns, at least in the short term, especially if we start breaking below 102.70. But right now, you see all the key moving averages and the key that 103.20. So any bounce would be setting up into there. Now, it is getting oversold with cycles at the bottom. So it'll be interesting to see if it sets up with a little short-term bounce pattern, but nothing yet. Crude, this is the other example. Running up yesterday, but remember, closing back below Tuesday's high. So you can't, if you're trying to do a percent B, you can't carry it. You could unwind some stuff intraday, but you can't carry it. Now, this is the same thing as I showed in the Russell. If we close below 77.52, we have the lower probability double. You see the channel is getting in the way and taking the targets away. So keep that in mind. But this would be key levels, especially if we get back to the 75 area. If it could even get back that far, that could be used to watch for bottoming patterns again. The only thing that really changes it in the short term is if we really get below that 74.50 area on a closing basis. Other than that, we'll be watching for continuing bullish moves. Now, keep in mind, we're getting a daily cycle bottoms, but on the weekly, we haven't even made a dent in this. And this area is very key, especially with the rising weekly 200. On any pullback. Natty gas, not much to talk about after it finished the double, unless it breaks above $2 again. Gold continued the push up. So we're building a higher base. Still expecting some kind of pullback or pause in gold with cycles at the top, but that's nothing I'd be looking for selling into. I'd be looking for pullbacks to look for buy patterns for rotations back up, especially with the climb rotation zone. The minor level is about 21.50, major level is about 21.30. Silver hitting the second target yesterday. And now this is very key. Remember, I talked about this, I believe I talked about this, with bumping down the final target area to about 24.70 to 24.85. That's a target area. Why? That's very key on the 62.5. And we've had this major topping area. Can't say it can't spike that final target, but I'd really pay attention to that area, especially with cycles at the top and overbought. So this is where from my perspective, if it starts stalling out up here on a shorter term basis, would not be looking to give a lot back in terms of trailing a far away stop. Now, if it closes above 62.50, which is 24.70, that's the price action has to close above, then that changes because then the probabilities shift higher. So then I'd look to give it a slightly wider stop. The yen really breaking down. Breaking now finally the uptrend, closing below a trend line yesterday and below this key support level, and then just pulling back. We get back through to 147.50. I'm watching for a pullback to the 200 area. 146. Okay, stalled out at that 87.5, and that's where it sits for now. Stalling out. Remember that 87.5 area is very key. So, but I'm really watching. This is the key support area I'm looking at least in the short term. So any rallies, I'd be looking for still rollover plays. Euro closing back above that 108.60, coming right up to the 109.17 area, and pausing here. We get above there. The next key area is 109.72. Because remember, this is the major reversal zone. It gets a close above 109.72, then continue to watch for the higher prices in the euro. Spiders, technically, with yesterday's price action, back in double top territory. And today, with the gap up, 511.88 is first key support. Then we're looking at 510.72, and then we're looking at the gap fill, 509.75. Below that, your major support is about 508.30. To the upside, you have 513.04 to be exact, then 514.20, and then your minor harmonics take you to 515.36 and 516.52. All right, so those would be the first set I'd use right there. Other than that, keep in mind any pullback into the open 511.88 is very, very key. The Qs, in order to get to double top territory, you have to get above 443.35. Right now looking 442.41, so 443.35 would be the first key area of resistance, and then it would be a gap fill to Monday's close, 444.02. Then 444.96 to 445. Now, the support, about 441.75 area. There's the close to the high from yesterday and the 62.5 harmonic, and then 440. And then if you broke 440, I'd be looking for the gap fill of 438.79. Okay, so that's where that sits. What else do we have here? Just to take a look at some other stuff. Tesla still no technical close below that 62.5 yet. Chipping away at it, getting down to oversold, but any bounce would be a rollover play. Again, the next major key area isn't till about 163. So Nvidia, which is taken over from the Tesla people, gapping above 900 today. Technically, the minor level is 903.38. From this little upward with the pausing bar, we're looking at 903 opening just shut slightly under there. And then you have 917.40. I still think this is going to try to be a magnet to the 1,000 area. We'll have to see if it gets there. It's very overbought again. But, I mean, yesterday was, a gap down, a little sell-off, and then an immediate bounce back. And that, the day before with Tuesday, then Wednesday, gap up. And then it looks like another gap up today. So people still pouring in. Hey, Derek, thank you for tuning in. Never, ever trust government numbers and the Fed. I don't trust many things. Pap thinks is bearish on gold. The fall will be big. Would I? Would you draw the long-term retracements on coin? If I can spell it. All right. Well, first off, you still have coin. You're at this very key area now. That's going to trade both Bitcoin. 242.92 is very key resistance. Above that, you have 284.91. So you're still watching 242 on a closing basis. So that is very, very key in the short term. Any pullback, you have very key support at that 200 area. So that's really about it. Now you're getting into a very strong resistance area, so you're really going to want that close above. I just mark it at 243. Cisco triggered a daily double bottom. Cisco did trigger a daily double bottom. Thank you, Christoph. Thank you, Christoph. So there you go. And this would be another one. I would edge down the final target a little bit. Now, Cisco looks like it's slight gap down, but the key support area right now in Cisco is right about 48.85. Barely eking out the double. Also, pay attention to this. Let me just look at this. This is interesting. This is interesting. New. I bet you it's still valid on the 1 hour. Yep. Actually is. This is interesting because I mean, as I would actually keep a tighter stop, and this would be one I keep a tighter stop on. Why? Because you have a double within a double. And this gives a good area because it's still valid completely in the 1 hour chart. Now, if this was invalidated on the 1 hour chart, it goes off the table. Why? Because it's not valid on the 4 hour. And it's still, even if this rotates up again, would be valid on the 1 hour. But that would be an area that it turns it into a lower risk play because already your stop can be tighter than the initial reward to risk. Why? Because if that triggers, you could see a further pullback, and that further pullback would invalidate the double. That's why. If the further pullback would not have invalidated the double, remember, you can't raise a stop yet, and look where the first target even is. A close below 62.5 at 440 at 48.22 would invalidate it. So this is definitely one, from the way I do things, that personally I would use a much tighter stop than just that 48.22. Hope that makes sense to people trying to learn some things, and maybe you can research that and incorporate it into your trading or not. That's the whole purpose of this, trying to teach some of the stuff that I've learned since 1992, and it comes out when I see great examples. So that's somewhat why it's challenging to really build. I mean, you can build the basics, in a course, but how often do you see this exact example? This is the kind of stuff I need people to capture and remind me of. All right. Did I do the Futures Edge podcast? I did do the Futures Edge podcast recorded yesterday. By the way, other things, hold on one second. Other things, I have a Ninja Trader coming up at 10 a.m. Central on the 20th, so 11 a.m. Eastern. And I'm recording with Bob and Jim next week because I will not be on the right after Easter. I'm not going to be on that week. And then also remember, with passing because in Illinois to sell a house you have to have attorneys, and the house has passed attorney review. The closings for the 19th, sometime around then, but I will be on my way to Arizona. So the week of the 15th, there'll definitely be, I might check in, try to stream something from my phone, but there will not be a lot of chart stuff going on. There just won't be. I'll be keeping an eye on the markets, but I can't do the thorough analysis, so keep that in mind. The channel will come back up once I'm situated in Arizona. but it's going to take me, you know, it takes me 3 days to drive with the dogs. And then I need to get a couple things set up again before I can really resume streaming. So mark that on your calendars too. Yeah, I'll be happier. Hey, Coco, thank you for tuning in, buddy. How you doing? The boomers in Congress are boring. We need more young people in the Congress. I don't disagree with you. I think these boomers should get out of the way. Thanks for the scheduling crew. You are welcome, George. What else did I miss? What else? Thank you everyone for tuning in. I hope you stick with me, even though the channel will be quiet roughly during my move, but I hope you don't abandon the channel. I guess anybody can. Hey, good morning, Richard. If I didn't say that before. Let's just take a look at the S&P going into the open. So still pushing up higher. Closing in on 87.5. The key pullback area, with the 51.35 to about 51.32 would be the key area I'd watch for a pullback. NASDAQ above the 62.5 right now. I'm going to be watching for that continued close above that. Let's just see where the tick is also. The tick, again, very strong tick opening. Look, yesterday was a massive tick opening. And then this is the kind of stuff, it didn't have, you got some pullbacks, but it made a higher base until it started getting in the afternoon. The tick started breaking lower, and then it couldn't sustain everything. But these are the kind of pullbacks I'm watching for. If it just pulls back here and bases around, you see either side of the zero, and it couldn't get really much below 400 on a real sustained basis. There wasn't a lot of selling pressure until the afternoon. So that's the same kind of pattern I'm going to be watching for. Now, if we start breaking down and getting selling pressure, then things change. Other than that, I watch for the pullbacks and then any potential bottoming patterns. You are welcome, Anissa. Thank you, Mark. All right, everyone. That's where we sit this morning. Unless something really changes, since you don't have much going on besides Powell testimony, and I don't know what else he could say other than what he said yesterday, which was slightly hawkish. I don't know if he can say anything that can really shift the markets. You have more, it's going to be watching out tomorrow for non-farm payrolls. That's going to be the key thing. 7:30 a.m. Central, 8:30 Eastern, so don't get caught off guard by that until then. And I will be on tomorrow morning, so thank you for tuning in. Bye for now.